Today, let's talk about a foundational stock in the consumer and retail industry to add to your diversified and long-term stock portfolio. That is Costco, ticker COST. Costco stock has delivered outsized returns. In the past 5 years, Costco stock has gained 210%. That is much higher than Nasdaq at 63% and S&P 500 at 55%. Or in general, Costco stock has outperformed Nasdaq and S&P at 3 to 4 times. In terms of 5-year total return, as a reminder, total return incorporates dividend reinvestment when considering share price gain. In the past 5 years, Costco has delivered 233% total return, much higher than Walmart at 74% or Amazon at 58%, or in general 3 to 4 times over performance compared to Walmart or Amazon. As a matter of fact, the total 5-year return of Costco translates to 47% average annual return. Very significant. In this video, we will deep dive into why Costco has been such an outperformer and why you should own the stock.
We like Costco as a stock for 5 key reasons. The first one is its clear market leadership. It is the third largest retailer in the world with an exclusive format of membership-based warehouse club format. Second reason is its excellent revenue growth. Typically, retailers grow at low to mid single digits. However, Costco has been growing at 12% average revenue growth over the past 5 years. Third reason, Costco has a very attractive, sticky, and loyal customer base. Its customer profile is very attractive, with its average customer making more than $125,000 in annual household income. Also, Costco's customer base is very loyal, with more than 90% customer retention. Number 4 is its best-in-class operational efficiency. Operating margins are typically razor thin in the retail industry, but Costco is hands up or hands down the best in class when it comes to operational efficiency. Lastly, Costco stock is also very recession resistant, and it benefits both from upside and downside economic cycles, which we will dive into later.
We'll also talk about when to buy the stock at the end of the video. Welcome to Thesis, stocks and investments for serious investors. At Thesis, our mission is simple. Discover, analyze, and monitor solid companies for long-term investors, leveraging our experience in investment banking and finance. We are not investment advisors. We are simply sharing our own research of stocks that we like. For more stock ideas, please follow us and subscribe to our YouTube channel, Thesis. In this video, we'll analyze what the company does, what we like about it, and when to buy the stock or the right entry point at the end of the video. Stay tuned.
Okay, so let's dive into what this company does. A household name. Basically, it's a global retail chain that sells food, groceries, and general merchandise, but in bulk sizes. So looking at what they sell, the basic foods and sundries that comprise around 38% of their total revenue. They also sell fresh foods or groceries that comprise around 13% of Costco's revenues. And the last item is the non-foods, meaning your appliances, electronics, hardware, office supplies, and furnitures. That category contributes around 27% of Costco's revenues. In addition to these products, Costco also provides a bunch of services. Almost majority of their locations do have gas stations with tire installation services. They also have pharmacies and optical services like your eyeglasses, contacts, and optometrists that do your eye test. Most of these locations also have food courts. In addition, Costco also provides travel services. So basically planning your vacation, booking your cruises, hotels, all that. And some of their locations do have business centers, meaning specifically catering to the needs of small businesses such as restaurants.
I would just add gas station is a smart strategy. Everybody needs gas every week or two, and people like to combine gas and other purchases. So basically driving traffic for Costco.
That's right. So it does drive traffic to Costco locations. So moving on to what is Costco's unique value proposition. They focus on value, they offer really very competitive prices or low prices on most of the categories that you buy at Costco. But they do focus on quality. So Costco stands for high quality products at a much competitive price.
The combination of value and quality is really the soul of a warehouse club model. The concept is never getting old. It captures a universal, never-ending pursuit of human for quality and value. Even Warren Buffett likes quality and value, buying high-quality stock at lower price. So this is the beauty of Warehouse Club.
That's right. So Costco, as we discussed, it's a membership club. So the basic membership costs $60 for club members. So for you to be able to shop at Costco, you have to buy this basic membership at $60. They also have an executive membership at $120 per year. Basically, you get more rewards, like 2% cashback rewards on your purchases.
Customers are more than happy to pay these membership fees in order to access the value and quality Costco provides. Costco operates 838 warehouse clubs globally across North America, Asia Pacific, and Europe. In the US, there are 578 clubs, or 70% of the club count. Internationally, Canada has the most clubs, 107, followed by Mexico, Japan, and UK. All in, international revenue accounts for about 27% of Costco's annual revenue. Within the US, Costco operates most of the clubs on the East Coast and the West Coast. In addition to that, they have locations in major population centers all across the states in the US. Costco is headquartered in Seattle and was founded in 1983. Fun fact, same location as Amazon. Since it was founded 40 years ago, Costco has now become the third largest global retailer. It's also the third largest grocers in the US, so company that sells food and groceries. By revenue, with revenue of $226 billion, Costco is the 11th largest among Fortune 500 companies. By market cap at $236 billion, Costco is the 26th largest by market cap among S&P 500 companies.
Costco operates in a competitive environment. Consumer retail in general is very competitively intense. However, in the warehouse clubs, Costco is number one with its 840 locations. The second closest competitor is the Sam's Club, which is owned by Walmart actually, that has 600 clubs, which is around 70% of Costco's size. Another regional player is BJ's, which is mostly located in the East Coast of the US, but it's a much smaller with only 230 locations, comprising around 30% of Costco's footprint. The second major category are these supermarkets and supercenters, which are household names such as Walmart with around 4,000 locations, 4,000 plus locations all across US. Similarly, Target and Kroger and Publix, which are more regional, focused on the East Coast and the South US, and then some regional players such as Albertsons. The third category is this deep discounter model, such as Trader Joe's and grocery outlet, but they do focus on not on bulk quantity, but on high volume, small size packaging type of player. And of course, there are the German companies Aldi and Lidl that also have presence in the US. The fourth and the emerging category is the e-commerce. As we all know, Amazon competes heavily in this segment, and then Amazon Fresh that is focused on the perishable or the groceries. Similarly, there is another player called Boxed, which is recently new in the last 5 years or so, but they do focus on delivering bulky items from warehouses to consumer locations via e-commerce. GoPuff, another e-commerce player, and Fresh Direct, if you live in cities, they do grocery deliveries for you.
Let's take a look at how much money Costco made and its historical financials. In 2021, Costco made $227 billion in revenue. It has delivered robust revenue growth at 12% CAGR in the past 5 years. In 2020 and 2021, Costco has delivered outsized growth. Think about during COVID, people transitioned to eating from home rather than in the office or restaurant. That contributed to more purchase at Costco. In addition to that, during COVID, there's stimulus check. There's also record low unemployment, and that also contributed to the outsized growth during these 2 years. In terms of operating income, Costco has been able to grow its operating profit at a 14% CAGR in the past 5 years. Operating margin was at 3% in 2021. This is typical compared to other retailers. In terms of membership fees, remember Costco has a membership model and members are required to pay $60 or $120 a year to access Costco. Costco made $4.2 billion membership fee in 2021, and that has been growing at 8% CAGR. Membership fee as percentage of operating revenue was more than half at 54%. This is important for two reasons. One, membership fees helps Costco to keep their merchandise at lower cost for customers. And number two, and we'll explain more in the following session, membership fees serves as a bedrock of profitability, so Costco can continue to deliver stable profit even during recession. EPS is growing at 17% CAGR, faster than top line, which is always good. Last but not least, Costco also pay a small dividend, although it's been growing at 12% CAGR. And Costco actually pays special dividend or outsized dividend every few years. Actually, coming back to revenue here, one important point I want to mention is at 12% CAGR in the past 5 years, Costco, this growth is amazing compared to any typical retailers in the US whose growth is in line with US GDP at 2 to 4%.
Now that we talked about what the company does, its basic business model, products and services, market leadership, and who it competes with, and the financial performance. Now let's discuss what we like about this company. As we discussed, one of the key reasons why we like Costco as a stock is its really attractive customer base. This customer base is not only attractive, but expanding and being very loyal to Costco. Costco's customers, on an average, they make around $125,000 in household income. Compared to the other two big players in the warehouse club format, Sam's Club and BJ's, their average customer base only makes $75,000 in household income. Just as a baseline or benchmark, the US average or US median household income is only $71,000 per year. So Costco has really attracted the higher earning population of US and across the world.
Who will buy more at Costco naturally?
They have a bigger size of wallet, meaning they have more consumer discretionary spending ability. In addition to that, Costco's member base overall has been growing rapidly. As of 2022, they have 142 million members that are part of Costco's membership club. And this number has been increasing, as you can see, but more importantly, these members are very sticky and loyal. So as you can see, the renewal rate or the customer retention rate, meaning the percentage of customers that continue year over year with Costco, has been consistently above 90% and been increasing from 90% 10 years ago, reaching to 93% as of 2022.
The reason why customers keep coming back to Costco is because it keeps delivering value to its members through multiple ways. First is its pricing leadership or pricing authority. At Costco, they consistently provide the most competitive pricing across its competitors. As a matter of fact, they price their regular items no more than 14% over cost and their Kirtland signature private label brand at no more than 15% over cost, strictly controlling pricing. Secondly, Costco offers a balanced product assortment that gives customers both value and quality. On one hand, you have the $4.99 rotisserie chicken, which hasn't changed price since 2000. And you have the $1.50 hot dog and soda combo, which hasn't changed price since 1985, despite all the inflation pressure.
I've been a Costco customer and been going and shopping at Costco as an adult for the last 15 years. And one of the reasons or one of the cult status that I have about Costco is exactly because of this $1.50 hot dog combo and a $5 rotisserie chicken that they haven't changed. So it was able to build this cult level perception among members that pricing is the competitive advantage of Costco.
Well, and then on the other hand, you can find extremely high-end items at Costco as well. For example, a $365,000 diamond ring or a $2,000 caviar. So Costco is really able to solidify its image as both value and quality. In addition, Costco keeps its customers exciting through new brands, most recently Fairlife Milk, Banana Republic Clothing, and also through seasonal products with limited offerings, such as kayak in summer and hot tub in fall. So customers keep coming back for a treasure hunt.
The other aspect I like about Costco experience is the food sampling. I think every weekend, Saturday and Sundays, they have these small stations where people serve you different treats, like they let you sample different foods. That's part of my Costco experience.
Yeah, you're really a value member of Costco.
I am.
Another way Costco delivers value to its members is through its Kirtland Signature private label brand. Private label brand is also called store brands, and it has become a big trend in the past few years. If you shopped at Walmart, for example, you would have seen Great Value, which is a store brand of Walmart, sold right next to its national equivalent brand. Retailers love private label because on one hand, it delivers higher margin for the retailer because the same product for the retailer is able to cut down costs like SG&A and marketing compared to a national brand. And so a private label brand product is able to deliver lower price for customers. Costco offers Kirtland Signature as its private label brand across multiple categories such as grocery, beauty, household products, kitchen, organic product, baby product, pet product, etc., etc. The difference here is Kirtland is obsessed with high quality. Sometimes private label brand has a connotation of low quality, but it's not the same story for Kirtland. Kirtland delivers 15% savings for shoppers, and at the same time, it's very high quality because it's manufactured by national brands such as Starbucks, Duracell, Ocean Spray, so on and so forth. As an example, for a bag of French roast coffee, Kirtland's signature brand, the product is sold at $9.99, while the comparable product is sold at $17.99. So 44% savings for the customers. And it's manufactured by Starbucks, same quality as Starbucks coffee bean. As a matter of fact, customers love Kirtland so much, the brand itself has reached 59 billion in sales in 2021, or 31% of Costco's total revenue. The brand itself is growing at 13% year over year, faster than overall Costco's sales growth. The brand is so big, it is actually bigger than big companies like Coca-Cola, Kellogg, Hershey, Campbell. And of course, the brand delivers higher profit margin for Costco. So really win-win for both Costco and its customers. Online shopping has become an integral part of any shopper's experience, especially during the pandemic era. Costco traditionally, as a warehouse club, they sell bulky, high volume products at the physical store. But in recent years, Costco has started to offer e-commerce to provide convenience, flexibility, and optionality to its members as another way to deliver value to them. In October 2017, Costco launched same-day and two-day grocery delivery option for its members. And for the members' convenience, Costco offered more SKUs online or more products online versus its own stores. As a matter of fact, 14,000 SKUs online versus 3,700 in store. And these deliveries are powered by startups like Instacart and Shipt.
I mean, Costco typically only carries around 3,800 different type of products or SKUs, stock keeping units, at any of their warehouse locations on an average. Compared to Walmart, if you go visit Walmart, they carry 140,000 SKUs. But via e-commerce, Costco is offering that additional optionality by extending its different products or product categories to 14,000. So that's the optionality that e-commerce is enabling, how e-commerce is enabling Costco.
Yeah, that is a good point. And actually, e-commerce in the last fiscal year accounted for 7% of Costco's total revenue. And during COVID-19 pandemic, Costco's online sales has increased dramatically, with more online sales growth in 2020 than the previous 5 years combined. But Costco doesn't just stop there. Um, in March 2020, Costco actually acquired a company called Innovel for $1 billion. It's a very smart acquisition because Innovel specializes in bulky item delivery. Think about things like a piano or a couch that you bought from Costco online. Now Costco is able to deliver those bulky items efficiently through Innovel. And Costco has been Innovel's customer since 2015, so this is not a blind acquisition. Costco know what it's getting into and know what kind of synergy it's going to achieve with Innovel. Another reason that we like about Costco is its operational efficiency throughout 40 years of operational history, from sourcing and distribution to inventory and merchandising and store operations. In terms of sourcing and distribution, Costco purchases in bulk or in high volume directly from manufacturers, and they distribute it efficiently to the stores, including asking manufacturers to ship products directly to stores and therefore cutting middle layers like trucks, warehouse, and costs associated with it. As a result, they keep their cost of goods sold or input costs low. Then coming to inventory and merchandising, Costco, we talked about, they offer limited, well-curated SKUs. As a matter of fact, they offer less than 3% of the SKU count compared to Walmart. And as a result, they don't have to put a ton of money into buying different types of inventory, locking up money. And they do smart merchandising in store. They display things in large pallets for the convenience of customers and then put the rest of the product on top of the sales floor. And so they don't need a ton of labor to bring products from the back of the store to the front of the store, saving labor costs. They also have rapid inventory turnover, meaning they are able to sell the products even before they pay the manufacturer. And because they sell fast, they can pay back manufacturers fast without putting in a ton of their own money. And so it's win-win, and Costco get discounts from manufacturers and manufacturers get paid fast. Last but not least, in terms of store operations, Costco is doing it very well. They have a simplistic floor plan to absorb natural light into the store and save utility bills. They also have no frills model in their stores, meaning minimal decorations and shelf, and so minimize costs. Customers typically self-service in store, and so they don't need to hire a lot of people to serve customers on spot. In addition, Costco operates on um, uh, 7 days a week and 70 hours per week. Well, think about um, for a 24-hour Walmart supercenter. Costco instead operates shorter hours, and so they don't need to hire a lot of people to cover shifts, and they don't need to keep the lights on for a very long time. Last but not least, Costco has strict control of exit and entrance. Only one exit and one entrance per store consistently. At the entrance, they check you are a member. At exit, they check you are not overpaying, and also importantly, you are not customers are not accidentally putting more stuff in their cart, and so reducing shrinkage, inventory shrinkage costs. All in, all these savings Costco do from operational efficiency benefit customers, employees, and shareholders as a whole. It's a win-win-win situation. Let's put Costco's operational efficiency in numbers. First, let's take a look at SG&A as percentage of revenue for Costco. SG&A stands for Selling, General, and Administrative Expenses, things like rent for corporate office, marketing expenses, advertising expenses, public relationship, etc., etc. The lower this ratio is, that means the more productive or efficient the company is. For Costco, its SG&A as percentage of revenue, or what we call operational leverage, has declined from 10% in 2020 to 8.9% in 2022, which means Costco is more efficient now. When comparing the same metrics to Costco's competitors, Costco in 2022, 9% operational leverage, it's much lower than Walmart at 20% and Target at 19%.
Basically, what it means is for every $100 in revenue, Costco spends only $9 in SG&A compared to Walmart, which spends 20 out of $100 in such expenses.
And Costco's low SG&A versus peers is because it basically spends very minimum dollar in things like advertising, because the brand and the value prop just sells itself. You don't need to spend too much money on advertising to attract customers. Another metric to look at productivity is what we call sales per square footage. So think about the same size store. If you're able to sell more, that means for the same amount of rent that you pay, the same amount of utility that you pay, you actually generate more revenue. For Costco, sales per square feet is at $1,975, almost call it $2,000. Double the amount at Sam's Club, which is also a warehouse club, and more than BJ's, and higher than Target by a far margin. So very productive store for Costco.
Now that we looked at Costco's overall financial performance in terms of revenue and operational profit, everything translates to how its stock has performed. In the last 5 years, Costco has not only beaten the overall S&P 500 index, but also the industry or the sector specific S&P 500 retail segment by a significant margin. Over the last 5 years, Costco's share price has increased by 209% in the last 5 years compared to Nasdaq growth at 63% and S&P at 55%. So that's outbeating the index by 3 to 4 times. Think about Nasdaq. It's a high growth technology companies. Think about Amazon's, Netflix, Salesforce. Costco, in fact, beat all those technology company growth in the last 5 years.
Amazing. Another key reason that we love Costco is because it is recession resistant. Costco caters to value-seeking people, and people love value regardless of good time or bad time, and especially in bad times during economic downturns. They even more tend to consolidate their purchase and buy in bulk, taking advantage of Costco's lower cost products. To prove this point, we look back in history through multiple economic downturns and recessions and bear market. So we compare Costco's performance versus overall markets during this major recession and bear market, starting from the dot-com bubble in 2000 and then financial crisis in 08-09 and recent memories to 2020 COVID crash and 2022 bear market. Throughout these economic downturns and bear market, Costco overperformed both S&P 500 and Nasdaq by a far margin. For example, during dot-com bubble, Nasdaq was down 78% from peak to trough versus Costco only down 43%. And in recent memory during the COVID crash, Costco was only down 11% versus 28% for Nasdaq, 33% for S&P 500.
I mean, for example, during the COVID crash in 2020 March, think if you were an investor in a technology stock such as Amazon, Microsoft, Google, or Netflix, just reflect on how much those stocks fell by almost like 30 to 50% in that month in COVID deep crisis. Costco only fell 11% during that time frame, which means Costco is and has been recession resistant over the past few recession cycles over the last 20-25 years.
In addition to comparing Costco to the broader market, we also compare Costco's performance versus its major competitors, such as Walmart, which owns Sam's Club, BJ's, which is a warehouse club, Target, a broadline retailer, as well as food and grocery retailers like Kroger and Albertsons. In terms of top-line growth, Costco is at the top of the pack at 12% CAGR over the past 5 years, and that is based on a high revenue base of $227 billion. So growing at teens at this scale is incredible. In terms of operating margin, Costco's operating margin on a 5-year average basis is at 3%. That may seem low, but that is inherent in the retailer business model. And 3% operating margin comparing to its peers is quite in line, in the exception of Target, whose product mix skewed towards higher margin general merchandise such as beauty, fashion, etc. Now, when it comes to valuation, Costco does trade at a premium in terms of PE multiple at 36.4 times. That is higher than any of the peers here, and it's even higher than companies like Tesla, which is trading at 31 times. Then the natural question is, yes, Costco is a great stock based on all the reasons we analyzed earlier, but when is the right time to own it or buy the stock without overpaying? Which we'll analyze in the when to buy section next.
That's $1 million question.
Great, let's get into it. Let's take a look at Costco's stock price trajectory. We already talked about how Costco overperformed S&P 500 as well as Nasdaq over the past 5 years. And we talked about how Costco stock was resilient during the 2020 March COVID crash. Another significant point of time was from April 2021. You can see here Costco's outperformance significantly expanded since that point of time compared to broader market. And in particular, during May in 2022, there's one day where Costco share price declined 12.5% in sympathy of Walmart and Target's disappointing result. Walmart and Target reported compressed profit margin because of inflation and inventory gluts due to supply chain issues on that day. And Costco and Target was down 27% on the day of announcement. Before that, Walmart was down 18%, while Costco only declined by 12%. And then after that, Costco share price rebounded after it announced its monthly comparable store sales result, where people realized Costco was executing much better in the time of uncertainty compared to its peers. In terms of valuation over time on a forward PE basis, Costco is trading at 36.4 times forward PE, which is higher than its long-term or 10-year multiple at 29.7 times. And it's higher than any other stocks that we cover at Thesis, like Salesforce and Zoetis. It is a little expensive. As usual, we did a sense check by looking at how Wall Street analysts look at Costco. In terms of analyst rating, most of the analysts rated Costco as buy, some rated them as hold, none rate them as sell. In terms of analyst target price, and these targets are medium term, like 6 to 12 months, the target price is at $560 compared to current share price at $534. That's a small 5% upside, which confirm our point that Costco share price might be a little bit expensive now.
Given Costco stock is slightly expensive right now, what do you believe is a right entry point?
At this point, it's really a balancing act. Now, Costco's current share price is at $534. It is lower compared to its all-time high at $608 achieved in April 2022. And looking at analyst target midpoint, it's at $560, which is slightly higher than the current share price. On the other hand, at the lower end, based on 10-year average PE ratio, Costco's implied share price would be around 432, and the share price has found recent lows or resistance level at around $450. So now the balancing act is, for long-term investor, number one, you don't want to miss the boat and miss the opportunity of buying such a great company, great stock. But on the other hand, you don't want the current valuation is a little bit high. So all in, given all this information, we do believe that an entry point below $500 or at $500 would be reasonable for long-term investors. All in, we think Costco is a great foundational stock to add to your long-term and diversified stock portfolio. But given current valuation level, we do recommend to add Costco to your watch list instead of buying immediately, and continue to monitor for a better entry point, which is below or at $500. And at that level, continue to buy the dips, meaning whenever Costco share dip by 5 to 10%, that would represent a great buying opportunity. At Thesis, we'll continue to help you monitor and follow up on Costco. Please follow and subscribe to our YouTube channel, Thesis. We'll also talk about other great stock ideas as well. Check out our videos on other stock ideas here.